welcome to yet another episode of NSE FinWiz Season 2 powered by CNBC TV 18. We are in the city of Bangalore to meet young professionals from Mindtree, a leading IT and outsourcing company.
Mindtree is a global technology services company that accelerates growth for global 1,000 companies by solving complex business challenges with breakthrough technical innovations. Mindtree specializes in e-commerce, mobility, cloud enablement, digital transformation, business intelligence, data analytics, testing, infrastructure, EAI and ERP solutions. Mindtree is among the fastest growing technology firms globally with more than 200 clients and offices in 14 countries. Focusing on our theme for the series, NSE FinWiz visited Mindtree in Bangalore to gauge thoughts and notions of the young employees on investments and financial planning.
Since I am very new to this market, I'll definitely first would like to research more on that. But as I mentioned, I have already invested in a few bonds. Bonds have a specific amount that will be given back, but mutual funds and stocks, they are a bit risky.
Currently, if I see, at my age, I think I should, I have that ability to take risk, and I should invest more into stocks. So that is what, would be my next, investment option.
I started investing close to 2 years back. Right now, my portfolio consists of a lot of long-term investments with low risks and guaranteed returns. So I've invested in a couple of LIC policies, SIPs, mutual funds, and the public provident fund.
I would definitely wish to invest in mutual funds and bonds because they are less riskier than equity shares and etc. Because equity shares really need some forecasting and monitoring on a daily basis. So which I would definitely get an edge on when I start investing in bonds, which is a short-term investment.
I would like to ask the financial experts about NSE trading in detail, differences between what is the book offering and the normal offering, and how much an IPO can influence in a long term. So questions like this, but it would be limited on NSE.
Well, here at the Mindtree offices in Bangalore, we will be talking to young professionals and discussing how they can better manage their personal finance. I'm joined with two experts, FinWiz Aziz, Executive Director, Anand Rathi Financial Services, and also Uday Dhoot, who's the Deputy CEO, International Money Matters. Uday, if I could come to you first. Personal finance is a very personal matter, but what happens often is that young investors or even matured investors who are investing for the first time tend to go overboard or tend to lose track. What are the biggest pitfalls or challenges that you feel first-time investors face?
I think the most important thing, and possibly the first time any investor goes to the investment side, is when he needs to plan his taxes and figure out how he can save taxes. The best thing about our tax instruments is that you pretty much can do the whole financial plan through your tax planning. So the important thing that you kind of have to get out of your mind is that I'm not here only to save taxes or make money, but I need to figure out what I really need. So the important thing for almost all of us is to figure out, why am I actually doing this beyond tax saving? Is there any other reason? So if somebody says that I just want to make money and also save taxes, then there is equity-linked savings scheme for you. Somebody says I need to ensure that my family is taken care of because I have dependents, then there are insurance products for you. Somebody says I just want to save good return, build some corpus over the next 10-15 years, then there is something like PPF for you. So I think the important thing for any investor for that matter is that figuring out why are you doing this, and tax saving alone cannot be the reason.
Well, goal setting, that means it's the priority that most investors should have. But FinWiz, if you are going to be advising a first-time investor, how do you think he or she should split his salary or earning from any other source?
See, before we get into splitting the money into salary and understanding why you're doing it, like Uday just mentioned, the purpose of investment has to be ascertained. See, one is people generally mistake one thing, which is money making, and one is wealth creation. They're two separate things. See, money making, buying a stock, selling it the next day, after 1 month, 2 months, that's making money. Wealth creation is nothing but trying to create enough money to meet all your goals. And quite a few people mistake that these two are synonymous. They're absolutely different things. Why do you need to create wealth? You need to create wealth because there is responsibility in this world. Okay, responsibility towards yourself, towards your dependents, to make sure that your life post-retirement is also good, or during this phase is also good. So that's one big mistake people do. One more thing which people do is they don't think about investing till the time they pushed around the corner. They delay it too much.
But going forward, there are plethora of options that are available for investors. There is equity, there is debt, there are insurance schemes. There's so many options. It's so confusing. It's so confusing for me. How does a young investor actually decide what should he invest in?
So first things first, I'm a firm believer that every product that is created is a good product. It's just being sold to the right, to the wrong person or the right person, depending on how your experience is. It's like medicine. You go to the store, you get all types of medicine. You need to pick up the right medicine for yourself. And keeping with the same example, picking up the right medicine would mean that you need to diagnose the problem correctly. Figure out what actually is it that you really need. So I'm just going back to what I said earlier, and I'm going to sort of repeat that again, is that first things first is that what are your goals that you're looking for? What are our common goals? First things, once I start working, what I need to ensure is that if something happens to me, I have some kind of an emergency corpus that is available to me. That is my first goal. So that if any emergency comes in, I have 2-3 months of salary available. So where do you invest? You want to invest that in something which is very easily liquid, very easily available to you, available at a very, very short notice. So once you start compartmentalizing your goals like this, it becomes easier to figure out what kind of investment product you need to choose.
I have one question on real estate. Basically, I am renting a house and I'm paying 15,000 per month. And it has been nearly 3 years I'm investing in, means I'm paying 15,000 per month in that house. So why, as per your thought, like we should not invest in a house loan for that? So I'm planning to have a house loan. So do you think like I should not have opt for that house loan?
When you're looking at a house from a consumption perspective, primarily, it really does not matter at what price you bought, right? Because you're not looking at the returns that you made in the house.
Okay.
When you're looking at something from an investment perspective, what are the kind of rentals that you're getting? The kind of rentals that you're making on the property value is say 2%, 3%. And if you're going to take a loan which is good 10, 12%, then you're kind of not necessarily actually making a lot of returns. Yes, there will be some amount of, apart from the rental income, there will be some capital appreciation also, but does not necessarily mean that you make a huge amount of money. The kind of money that people have made in the past may not be necessarily the kind of money that people are making it. The point is that it's not necessary to dissuade people from doing this. The important point here is that a lot of people do this just because everyone else is doing it. Just because it's easy to get a loan and do it. What we do not realize is that as soon as you take a loan, there's so much other pressure on us. We are kind of pretty much can't do anything else that you would like to do.
But it is the pressure for us now, correct? We are paying 15,000 per month, and if it is for 3 years, it's nearly 4,50,000 per year I'm paying out. So why can't we opt for a home loan?
Yeah, super. So if you pay 15,000 rupees a month, for 12 months, you would have paid 1,80,000 rupees.
Correct.
Okay. Now what's the value of the house you live in as an estimate?
40 lakhs.
40 lakhs. Now, you are paying 1.8 lakhs of interest, rent.
Yeah.
If you buy a 40 lakh rupee property, at 10%, you will have to pay a 4 lakh rupee interest. So on one hand, you have a 4 lakh rupee interest, and you have 1,80,000 as your rent.
Okay.
Right, which is greater. Of course, 4 lakhs is greater. So interest is greater than your rent. So as soon as you buy a house, you're going to pay a 4 lakh rupee interest on a yearly basis. So 1,80,000 which you're paying as a rent is not wasted because you're saving 4 lakhs of interest for having not bought that house.
Well, you're watching NSE FinWiz Season 2 powered by CNBC TV 18. We're going to be back soon after this break.